Hello, my name is Rick Meadows with Trade with the Pros. I've been an active trader for over 17 years. And today on this video, we're going to be talking about the foreign exchange market, abbreviated Forex. This is by far the most liquid market in the world, trading $6.5 trillion a day. I can't even wrap my head around what that means. We hear so much about billions and trillions. What does that mean? What I mean by that is that time on a clock, say for example seconds, tick, tick, tick. 1,000,000 seconds ago was 11 days. 1,000,000,000 seconds is 32 years ago. The difference between 1,000,000 and 1,000,000,000 is not the same thing. 1,000,000,000,000 seconds ago was 32,000 years ago. I can't even wrap my head around it. The U.S. economy is the largest economy in the world, $22 trillion when you measure up all of the transactions. This thing trades the entire U.S. economy in 3.5 days. It's stunning. Why? Well, imagine if you own a business in the United States, say for example a Suzuki motorcycle dealership, and you have the largest Suzuki motorcycle dealership in the Northeast with several of these outlets. You need to buy these motorcycles from Japan. Well, when you buy those motorcycles, you don't pay for it in US dollars, you do it with yen. So you need to exchange the US dollars for Japanese yen to get the motorcycles. So anytime there's a business transaction with two different currencies, you have to go through, you got it, the foreign exchange market, Forex. This is by far also the largest trading vehicle for retail traders around the world. What do I mean by that? Well, you and I are the retail traders. Now, in the United States, when people think trading, they automatically go to stock because it's part of our culture, not the rest of the world. Imagine if you lived in Costa Rica. If you live in Costa Rica, yes, there's a Costa Rican stock market, but it's just not very liquid. So in other words, it makes it very difficult to get in and out of your positions, and the spreads are a mile wide. So it's just not something that would be, appealing. But if you live in Costa Rica and you want to trade, the Forex market is highly attractive because of all of this liquidity. It gives us a lot of opportunity to get in and out. It's a fair market because there's so much trading, you're going to get your price. That's why we want to stick with the majors. US dollar, Swiss franc, Aussie dollar, Canadian dollar, yen, those types of things. Why? Because there's so much trading between these countries that the spreads are going to be just a pip. What's a pip? A pip is the smallest increment when we're trading currencies. If you take, for example, the US dollar is broken into 100 pieces called a penny. Well, in the currency market, in the Forex market, the US dollar is broken into 10,000 pieces called a pip. And that's very important because your commissions are going to be based on this spread. So what is the spread? The spread is the difference between the bid price, where somebody wants to buy it, and the ask. When you're trading some of these very liquid currencies, the spread is so tight it's only a pip, and that means your commission would only be around a pip and a half, maybe if it widens up, 2 pips. So this is a great market, and you can place your trade where it could be triggered 24 hours a day, where the US stock market's only 9:30 to 4 Eastern Standard Time. That has some really big implications. In other words, because of this 24-hour market, we're able to manage our risk better. Imagine you're trading stock and you are long. Now, when I say I'm long, what I'm saying that I'm buying something hoping to sell it at a higher price. So say for example, I'm long and the price is going up and I'm holding this stock another day or a week or a month, whatever. And then there's some crazy political event that happens halfway across the world at 3 o'clock in the morning. Well, the next day when I wake up, that stock market is going to be, the futures are going to be driven down. And so that could mean that my stock gaps down. In other words, my stock closed at 4 o'clock Eastern at this price, and the next day it's opening down here, which doesn't allow for proper risk management. When you're trading the currency market, because of the nature of the market, I can place a stop and it'll be stopped out. I like that. A lot of leverage too. 50 to 1. When you're trading stocks, the best you can get is 2 to 1 overnight leverage. 2 to 1, 50 to 1 on the Forex market. That type of leverage is a two-edged sword, because we can lose money, but we can also make money at a much greater pace. But the beautiful thing is that when I'm actively managing my risk is always going to be honored in this 24-hour market. And then the rewards are so great, giving me huge opportunities for terrific rates of return. Tax advantages. There are huge tax advantages. The blended rate is about 12% less in taxes. Ballpark. Now, if I was going to do something, and say for example I had some job and I was going to get a check. Well, if I was paying 12% less in taxes overnight, all of a sudden I'm getting more money and able to keep more money doing exactly the same thing. And those are some of the implications that you have with trading Forex. There's no wash sale rule and some of the other funky things that happen in the stock market. Not so much, not with Forex. Another thing I like about Forex is there's always a bull market. So what do I mean by that? A bull market is when the market is going up. And there's always a currency that is stronger against another one. There's always one strong against one weak, and it's always moving up and down, which leads to these fabulous trends that you can get in and hold for a longer period of time. If you're the type of trader that you like to hold your position for a week, 2 weeks, a month or more, Forex might be a much better way than, say, futures. The other thing I like about currencies is that it can actually help me with my investing. Well, what do I mean by that? Imagine if the US dollar was gaining strength. In other words, there was a lot of demand for the dollar and the price was going up. Well, that would mean if somebody in Europe wanted to buy a US good and import it, they would need more euros to purchase this thing that is whatever it is that you're trying to import that is priced in dollars. If you need more euros to do that, that makes those US exports more expensive. Think about that. If the US dollar is gaining strength, that means US goods are becoming more expensive abroad. So do you think the stock market is going up or down? Now, if you said the stock market is going down when the US dollar is going up, that's a good correlation. Now think about this. Imagine if you are making investments and you see that dollar is gaining strength. Maybe it's time to get out of those investments. Now, I'm not making a recommendation, let me tell you, but imagine if you just understood more asset classes. Would that allow you to be more comfortable making your investments or doing other trades? The Canadian dollar, for example. The Canadian dollar is tied directly to oil. Oil prices going up, Canadian dollar is probably going up too. And there's all sorts of different ways. When you truly understand what the currency market is doing, it can help you trade and invest in other assets. In a nutshell, Forex is buying and selling currencies in a decentralized market. This type of trading can be very rewarding with education support and a proper trading plan. But remember, risk is key. If you have any questions, drop them in the comments section below. And make sure to hit the subscribe button for more videos. Thanks for listening. Have a great day.